All right. All right. So let's dive into some charts and then maybe we can jump into some market caps and get what we were just talking about on the recordings. Can everyone see my screen? Is my screen okay?
Yep.
All right, cool. So obviously Bitcoin's still not doing a ton. But as we can see right now with some markets and some coins, Bitcoin going a little bit sideways isn't necessarily a bad thing right now. It's kind of, I think, giving a pause to the market for some other projects and coins to get some liquidity and some attention. Let me just put my volume indicator here. Cut up my volume indicator. So not a ton to look at with Bitcoin. I mean, sideways or up is not a bad thing for alts and other markets. Obviously, if Bitcoin had a big dump, while we know the drill, we probably see the alt markets get hammered, and unless they created an inverse correlation, which does happen from time to time. So we won't necessarily we won't look at Bitcoin too much unless Chris has anything to add. But I think we've pretty much kind of summed up our thoughts on Bitcoin for like the last 2 months on Bitcoin. As far as obviously everyone here probably knows that Tezos has been getting some love this week. The sleeping giant is kind of waking up a little bit from its slumber. A big part of that is obviously because of the vote. It just successfully launched its first vote. So they basically voted for rolls to get reduced down to 8,000 XTZ to run a full node versus 10,000, and a few other technical elements. They didn't do anything too radical with the first proposition, which is good. So obviously it doesn't create too much contention. Other things in future might be a little bit more radical, like if they were to implement Zsnark technology, like Zcash type stuff, which might be on the agenda. But the cool thing is, and so this is called third generation blockchain, basically. The reason why, and a lot of people who've been with us already know my reasons why I like it, but one of the predominant reason why I feel like this project is a pretty big deal is because it's historical. It's a historical trend setting technology. It's the first time in history that you have a self-amending blockchain where you can vote on protocol changes without hard forks. This makes it like the entire base layer of the blockchain is programmable, not just like smart contracts on top, but the entire base layer is programmable and malleable based on community vote and consensus. And that, for anyone who's been in crypto for a few years, knows that contentious hard forks and community rivalry and infighting and politics is such a big deal in crypto. And Bitcoin till this day is still fighting over its block size. Now you've got you have Bitcoin, and then you had Bitcoin and Bitcoin Cash with the hard fork, and now Bitcoin Cash split off, and it's like Bitcoin Cash and Bitcoin SV, and then given enough time, and SV will probably fight each other, and then there'll be SV and VS and LMNOP and whatever, right? And with Ethereum, you have Ethereum and Ethereum Classic, and apparently Ethereum right now is even having another heated debate because there's a lot of miners who are invested in the Ethereum ecosystem, and they don't want to see it move to proof of stake necessarily. So you've got different large players and stuff, and usually what ends up happening, even though there are checks and balances in cryptos, usually what ends up happening is the core developers get a lot of the say because they have a lot of the influence, and they also have a lot of money, and oftentimes are in good with big miners or are doing mining themselves. So this in the perfect world, this might solve a lot of those problems. It doesn't mean that it won't have its disputes as well, or that it can't hard fork or whatnot. But it does show if it succeeds, it is groundbreaking technology that can solve a lot of those governance problems with blockchain, because when you think about it, at the end of the day, all we're dealing with is experimental economies and government. We're playing with new economic and government models. So that's the fundamentals. Looking at the technicals. So that's, you know,
So Rock, so I think everybody knows, like, okay, we know what a hard fork is.
yeah.
In the real world, what will this look like going forward for Tezos? So like fill in the blank, like instead of a hard fork, it will look like blank.
Okay, so like a hard fork is you basically have to take the history of the ledger and you have to write an entirely different set of, you take the basis of the rules in the software, but you have
Yep.
to create variables in it that are not compatible with any previous versions. So it's like a software upgrade. So imagine, you know how we upgrade our software all the time. So imagine you have you know, software like I don't know, your operating system. Let's say you have Windows or something. So
Yep.
imagine you had to like completely reinstall that from the get-go, and it wasn't compatible with an old version. It'd almost be like upgrading software systems. So like, let's say you're on Windows 8 or something, and then you move to Windows 10, right? And there's some things that might have compatibility, but not really, right? Once they mitigate everything over. So,
Yeah.
so now imagine you have an operating system where instead of having to completely buy a new operating system and completely wipe and upgrade your computer, imagine if your operating system could automatically upgrade to Windows 10 from, you know, just all internal. Maybe that's not the best example. I'm trying to
Yeah,
find
that
like,
makes sense. So it's more of like an evolution rather than like having to completely separate yourself from the old system.
yeah, because like one of the problems is if old nodes don't upgrade, like let's say someone's just running a node for whatever, they have a wallet and they never upgraded, then the new
Yep.
system and the new network will not read any of the old nodes. So those
Right.
old nodes will just kind of fall off the network, right?
Yeah.
So it requires, in order for it to work, it requires everybody to get on board and everybody to change their, you know, rewrite and change their nodes, right? Upgrade their
Yep.
nodes, thing. And then you can have like contentious hard forks. Like, so for example, when you look at something like Ethereum, the reason why it was such a big deal back in the day is because they came out as a social contract. I mean, if someone comes out with a blockchain, they're creating a set of rules in their white paper. They're saying, this is what our blockchain represents. So Bitcoin comes out, Bitcoin says you don't need to trust third parties. They say, why is that? Why don't you need to trust third parties? Because it's autonomous. Well, how can it be autonomous? Because you cannot change the ledger. It's immutable. Therefore, nobody can go back in time and erase transactions as if they never happened. So there's
Mm-hmm.
the double-edged sword. You lose money, too bad, so sad, tough love, right? But that's the rules. Ethereum had a similar set of rules, and they said, we have smart contracts. We want to create this utopian society where you can have, you know, contracts or code as law, and you can create a set of code, and that'll be the law, and it's unbreakable and immutable, and you can't change it, blah, blah, blah. And so it sounded really good. And then they created this thing called the DAO, which was kind of like a VC smart contract where it says, okay, everyone's going to pool their money together and they're going to put money in it. They're going to get a token. It's almost like their DAO is trying to create Tezos, actually.
Mm-hmm.
But it was a smart contract. So they created, we're all going to pool our money into this. We're all going to vote on what the DAO does. It can release funds. It can fund these developers, create these projects. It's going to be like a decentralized VC. But then some, and they said code is law, this is immutable, unbreakable, ironclad in their marketing. And then all of a sudden, some hacker found a little loophole and was able to just siphon off a bunch of money. And then all of a sudden, you know, Vitalik and co came out and said, oh, we have to change this. We have to we can't have people lose money. So what they did was they took the entire Ethereum ledger, they created a carbon copy of it, but they just erased a little part of the hack in the ledger, and then they got everyone to hard fork to this new ledger, and that was their hard fork. And so then the old fork, because some people had a philosophical issue with that, decided to keep the old fork alive, and that became Ethereum Classic. It split the community in two, although there's probably a minority that was an Ethereum Classic, I'd probably say maybe 10% of the Ethereum community branched off to that because the majority probably put money in the DAO, so wanted to see their money back,
Yep.
type of thing. So now imagine all that drama and stuff, but instead of like Tezos never came out, like there's immutability in Tezos as far as like transactions, but Tezos came out with its value proposition and social contract saying, imagine if we just have one of these blockchains and ledgers where people can just vote right off the bat instead of like developers fighting each other and infighting and creating all this political warfare about who's gonna, and maybe it becomes highly centralized and only a handful of developers ever win or whatever. It's like, let's just, we'll almost treat it like it's like a decentralized network or corporation, and everyone who has coins can vote on the changes. But here's the cool thing. The changes, voting for the changes isn't just a political ideology. So it's not like I can just show up into Tezos and say, hey, I want to propose that we do X, Y, Z, and then create all this politics, like maybe like a Roger Ver or whatever. If I want to propose a change, I actually have to have the code written first. And then, so there's a process. Someone has the code written first, and then they make the proposal, and the code is there, and people can vote on option A or B, whatever code. And then once certain code is voted for with certain parameters, then it goes on a test net. And then they get to see how it operates kind of in the wild on the test net to see if there's any unforeseen problems or glitches. And once it passes through that test net, then it actually comes out onto the live network. So, and because they're using OCaml or whatever, because the code has formal verification, it means that the code has a mathematical ability to self-verify to ensure that it's free of bugs, which has been another major issue with Ethereum, is that there have been many multi-million-dollar debacles and multi-million-dollar losses, like the parity bug with that parity client, where a whole bunch of money just got frozen because they accidentally had a kill switch in it. And so apparently this code that they're using has mathematical self-verification program. Now, I'm obviously not a developer. I understand this stuff like on a philosophical level, but on a deep, nitty-gritty, like how to implement it, I don't. But those are from a 360 bird's eye philosophical view. That's really what separates this from other chains, right?
Love it.
So
love it. Yeah, that's helpful to hear. Like you, Rocky, like I'm not technical, but I mean, I think we can see kind of the differences and also just the market sentiment, how it's kind of shifting. Hey, do you mind if I pull up my chart real quick?
Sure.
I wanted to do a quick lesson, just kind of talking about my entries yesterday.
Okay.
Real quick, before I do that though, did everybody see my my trade alert from yesterday? Did you guys all get to read that? Okay, cool. Just making sure. If not, you can go back and read this after. But I'll just kind of vocally walk you through my thought process and what I did yesterday, and also kind of the plan and the possibilities and probabilities for this. So as you guys know, like in bear markets, I'm very, very conservative when it comes to investing in altcoins or really just anything. Like when we're in a bear market, my kind of modus operandi is just conservative, right? That means smaller position sizes, less trades, quicker profit targets, things like that. Now, with that said, if we look at the total market cap excluding Bitcoin, let's just look at a weekly chart. And we've been talking about this for quite some time. We're down over 90% from the highs. Again, this is all altcoins. And even if we look at Bitcoin, I mean, it's still a massive percent down, right? So one thing that's impossible to know until after the fact is the bottom, right? Like using quotey fingers, like where is the bottom? It's very, very difficult to to know that until after the fact. But one thing that I start to look at is when prices are down 70, 80, 90%, I start to look at projects that have real development or a real product behind it or something unique, something that in the next cycle will look like it will be the first or one of the first projects to get legs, meaning to go back into a bull cycle, right? And so, I've just been looking at things like BAT, the browser, which I was buying down in here around the 15, 16 level. There's several others, but the one obviously that we want to talk about today is Tezos. And if we look at just a daily chart here, one thing that I found interesting is how over the past couple of months, really since December and January, we started to show a bottom here around 35 cents, right? So, and this is pretty typical of new coins when they get listed, is you have kind of the big red wall of death, I call it. Just jokingly, I mean, this is what happens when coins get listed. A lot of people just instantly dump. It's not like an IPO on the stock market where you have investment banks that underwrite IPOs and they try to mitigate this kind of crazy first day opening price action. But anyway, that's what happens typically. When you have a project that raises a lot of money in an ICO, because there's a lot of early buyers, those people just typically dump, right? That's just what happens to 90-something% of altcoins. And then you can see we got a little bit of follow through and then finally found a bottom, right? And then we started to accumulate here. And then over the past 48 hours, I was watching this move into resistance and started to see kind of an uptrend in average volume, right? So I'm like, okay, there's buying into this resistance. It's really the third or fourth touch here. If we can get a squeeze, maybe this will be the first sign of some kind of new cycle coming in, right? Now, with that said, and if you look at the chart that I posted in Discord yesterday, I didn't know that was going to break out same day. All I know is, and I'll show you a chart with my entries and kind of the intraday price action so you guys can kind of get an idea. But actually, let me pull up this chart too. So this was the trade alert chart from yesterday. And you can see at that point, there's like increasing volume, right? Even though that daily, you can barely see it. It's a little red candle. There was already exceeding the prior day's volume. And whenever I see that, it's the third, fourth, fifth touch of resistance in an accumulation pattern, the odds of a breakout go up, right? The more you test resistance, it's kind of counter to what you hear in technical analysis books. It's like technical analysis books will tell you, oh, if it's a double top or a triple top, the resistance becomes stronger over time. It's actually the exact opposite. The more you touch and retest a price area, the higher the probability is that it's going to break. And so I noticed that on increasing volume, and then I went down to the intraday chart. And so I'll show you, I'll pull up a level 2 and just give you kind of a little masterclass on how I scale into trades. But what I was doing was, and this is the Tezos BTC chart. So I noticed the push, retest, and then, or push, retracement, retest, and was anticipating a breakout here. And so I started to get fills as we were retesting that level. Okay.
But you created the breakout.
I highly doubt that. That was, let's see, how much did it trade yesterday? It's trading. Yeah, it's well, and here's the thing too, like,
good timing though.
Yeah. I mean, and that's the thing. That's why I really like breakout areas, because whenever I get into a trade, I do want to get fills as close to the move as possible for a couple of reasons. A, time, right? Like, I don't like getting into trades and then having to wait for a long time. So I look for those inflection points, right? And the second is just risk to reward, right? So they kind of go hand in hand. But you can see like the volume, at least on CoinMarketCap, and even some of the other competitors to CoinMarketCap, are showing these exchanges that I just don't trust. So whenever I'm looking at this, I was really just looking at Kraken and Bitfinex. Those are kind of the two, I guess. I don't know anything about BitMax yet, if they're legit. I see some others on here that I know are just kind of scammy. So what I was looking for, and because I was being conservative, I wasn't really accumulating heavily, kind of like, Rocky has a really strong fundamental backing in Tezos. He really likes it. He went heavier. So he's a little more on the aggressive side. I like to show you guys kind of the contrast between our trading styles, just to show you like there is no single right way. Like Rocky's made a lot of money on trades that I've missed out on because I was more conservative. And I've also had smaller drawdowns, meaning, intra-position losses, right? Like paper losses, because I'm more conservative. So it's a spectrum, right? So you have some people that are very, very aggressive, and you have some people that are very, very conservative. I would say, like, on a bell curve, I'm probably on the 70% or 80% conservative side. But whenever I have strong conviction and I know the setups that I'm really good at, I go hard. I go heavy. I'm not afraid to risk a lot of capital, like on a percentage basis, right? Like I'll be comfortable risking 10, 15% of my entire risk capital on a trade if it's the right trade for me, right? So the reason why I'm kind of explaining this whole thing is you have to decide for you, where is your risk tolerance, right? Like, are you somebody that can buy an ICO or a STO or an altcoin that's relatively new on exchanges and doesn't have a lot of price discovery? Can you hold through a 50, 60, 70, 80, or 90% drawdown and still have conviction in your position? Or are you somebody who, if price goes against you 5 or 10%, you're sweating and freaking out, right? You have to, and that's a very personal thing, right? You have to figure out who you are as a trader, and what you're comfortable with. So for me, I have developed, and this, guys, trust me when I say this, like this did not come naturally to me at all. Like I was the exact opposite. I was so impatient. I was so nervous. And I used to overtrade like crazy. That was my biggest weakness, was just over trading. And this is going back to my like day trading days, way before crypto. And I noticed, like, okay, the more you trade, the lower your profits are over time. So what I noticed for me is, like, the more I pulled back, it was like I'm actually making more by doing less. So that it took many, many years for me to make that shift, because I'm stubborn as hell. And that's why I'm trying to like communicate this as well as I can today, because I know there's probably at least 1 or 2 people right now that are sitting there going, yep, I'm kind of similar. Like I find myself over trading, putting on too much risk too early, right? If that's you, don't beat yourself up about it. Just recognize it, read Trading in the Zone, and then make adjustments going forward. That's really the best advice I can give you guys.
Yeah,
now,
absolutely. That's great advice, Chris.
Yeah, thanks, man. Yeah, and I mean, again, Rock, like you said, like you have a lot of conviction in Tezos, and you put big risk on the table early on, and you're okay. You know you could lose that money, right?
Yeah. It'd certainly be like breaking a leg, but it wouldn't take me out of the game. I'd still be
following along. Yeah. Yeah, that's what trading's about, guys. You have to understand that, like, when you place bets, right? When you take trades, the future is unknown, and the price action in front of your position is out of your control. All you can do is look at the probabilities, possibilities, and create a plan. So with that said, here is my plan, okay? So again, yesterday was kind of my first fills around this area for reasons we already talked about, but the plan and the possibilities are this. So let's start with possibilities, then talk about probabilities, and then talk about the plan for each of those scenarios. Possibility number one, and whenever I'm doing this exercise, and we talk a lot about this in the boot camp, But the first thing that I look at when looking at possibilities is I always look at the loss side first. So what is the bear case if I'm long? So the bear case for this is, well, fast forward a month, 6 months, a year or two in the future, and for whatever reason that we can't see right now, this goes to zero, right? That is the worst case scenario, right? And it's a possibility, right? No matter how much Rocky or me or anybody else loves this project or just is impartial to it, no matter what that is, there's a possibility that this goes to zero, right? So that's the worst case scenario. And again, there could be things that happen in the future that we don't see. Like a similar scenario to the DAO could happen where somebody exploits something in the code, and then we look back and we go, oh crap, that killed this project, right? I'm not a technical coder. I can't go in and audit it and make sure it's bulletproof. There's a lot that I recognize that's outside of my control. So I'm going to say loss of 100%. The other possibility, so we'll just call that possibility A. The other possibility is moon, right? So I'm going to call this, we'll say, a gain of a bull cycle. And we don't know what that bull cycle is going to look like until it happens. This is something that one of the best exercises I ever got in don't underestimate bull cycles came with the first bull cycle of Ethereum. So Ethereum, for those of you that were with us, I believe it was early 2016, Ethereum, after it opened, let me pull up this chart.
You know what? What if you get a price? Is it possible to compare the two charts side by side?
Yeah, I think so. It was, I think it was Poloniex, right?
Yeah, it was Poloniex. That was like the first exchange, I think, that listed it, or one of the first.
Yeah. This is such a good lesson, guys. It's so relevant. Where is it? USDC now?
Yeah. Okay,
nope.
So that'd be, yeah, there you go.
Trying to find Polo.
It would be USDT. It would be Ethereum.
Oh,
USDT,
okay.
On Poloniex.
Yep. Here we go. Okay. So here's what happened. And this chart looks a little different than it did back then for some reason. I think they may have switched it to Tether. I don't know, whatever. Anyway, I remember like a big red bar. It was very similar, and then it accumulated, and then this was the first breakout. So this is very similar to what I think Tezos kind of looks like today. And again, I'm not saying that Tezos is going to do this, but this is just very similar price action. So when Ethereum listed after the ICO, what was the ICO price, Rock?
I think it was like 35 cents or
30 cents.
It's something like that.
Yeah, and then when it opened on the exchanges, it had that red candle. I don't know why it's not showing up on this chart.
Even if you measure a percentage from the tip to the bottom, I think that's still going to be like from the top to the bottom. I think that's still going to be like a 60 to 70%.
Yeah, it's like an 80% fall.
It doesn't look like
so maybe this was it. I don't remember. Yeah. Anyway, look at this though. Like initial list,
take it to the other bottom.
Right? Yeah, it's like, call it a 75 to 80-ish% dump, right? Yeah. And so I was just watching this. I unfortunately or whatever didn't get into the ICO, and I just watched this, and I was learning and studying as much as I could about Ethereum, and then this was my first trade, was around $1.50. We bought this breakout, and the prior chart actually looked more clear. There was like 3 or 4 touches of this, but anyway, you get the idea. It had the accumulation, and then it had the first breakout of a range. So we took that as a breakout, took a little profit. Then we had another 1, 2, 3, 4 breakout, took this around $3. And then when it got to 7, I'm going, what the hell is going on here? This thing just went from $1 to 7 that fast. I'm like, this has to be the top. Well, nope. Sure enough, good thing I followed my plan. We had another breakout trade here at 7, and then it doubled and went to 15. Okay. So This is just a lesson in not underestimating bull cycles. So again, big idea here, guys, is I'm not saying this is going to happen to Tezos, but this is just what can happen in the event of that possibility. Is like you can get these cycles that, based on any analysis that you can do, any TA that you can do on this chart right now, a real big bull cycle, you can't do any technical analysis based off of this chart that will make sense if something like that happens. So what I do is I look at the initial runs and retracements if something like that happens, and then start to run fib extensions and measured movements off of that. And then what I do is I go from like kind of accumulator mode with an initial position to then adding 2 positions when or if it starts trading with conviction. Because right now, I mean, really, yeah, we have a little kind of 3-day pop with increasing volume, but this could still fail. Like this, just because we're starting to break out, I mean, we could follow this line exactly like to zero. Like I'm not convinced at this point that this is the start of a much bigger bull trend, because A, crypto is still in a bear market. B, there are a lot of bag holders from back here. So in my opinion, for this thing to really go crazy, we have to get through this $1 to $1.50 mark first. Okay. So if that happens, then trying to kind of think about what that would look like from a market sentiment perspective, like say price action did exactly these green lines over through summer, right? So through May and June, say it followed something similar to this. What would that look like from a market sentiment and a news perspective? Well, CoinDesk and all of the other news article or news sites would probably start posting stuff. Imagine if CNBC picked it up, right? This is what we talked about before, like whenever we took the 30-cent breakout trade on Ripple. I was half joking saying, watch guys, CNBC is going to end up pumping this soon. Sure enough, that week, these idiots were on there pumping it. Like, so... So like this is what can happen. So I think about the future, not trying to predict it, but to kind of imagine what that scenario would look like from all angles, right? Like what would Reddit look like? What would crypto Twitter look like, right? If this started to develop into something like that. So that's the bull case. The bear case is, okay, we pop a little bit, say we even get up as high as $1, right? We get into this prior resistance level and then it starts to fade off. And then let's say Bitcoin dumps again. And if you guys saw the Wall Street Journal's article about Bitcoin and crypto yesterday, like basically a hit piece, say we get more of that, then it could fade off. And an example of that is Ripple. So, Rock, how long did Ripple take to actually go through a bull cycle? It was like several years, like was it 14 that it got listed?
Yeah. So the interesting thing with Ripple, got listed in 2014, I believe. It actually went on a 13 or 14. It actually went on a pretty wild pump in 2014, but during the bear trend, but it wasn't anything compared to what it pulled off in the actual bull cycle. And then after that initial wild pump it just kind of bled off, and it just went on this like multi-year bear cycle. Then it had this very long drawn out, a stair step down, almost like accumulation pattern where it was just making steps down. Had lots of little spikes on news that would do full retraces. Market sentiment kind of hated it. And the next thing you know, the damn coin melted people's faces off. I mean,
yep. So guys, so this is another scenario that can happen is you get a coin. So this was still super early. So this was 14. I wasn't even paying attention to Ripple at this point. It had this random pop and then it just faded off, right? And then once we got in here, so early 16, this is where we started to accumulate a little bit. It was like, I think this price was like a half a penny or something. And once I noticed like, oh, okay, we did a full retrace of that initial pump, I started to accumulate through here, just a very small amount, like maybe 1 or 2% of my portfolio. And then I noticed it was making new lows, and I'm like, all right, this thing is so low. It's either going to zero or it's going to pop. And so I accumulated a little more through 2016. And then one day I wake up and I check CoinMarketCap, and it was up 175%. I can't remember exactly what day it was, but it was one of these green days that it was up at the top of the gainers list. And I was like, oh shit, cool. Let me go check my Ripple holdings, because I wasn't even really paying attention. I was just kind of in accumulation mode. And I'm like, one thing I noticed is every spike got sold into. It couldn't actually do one of these. It couldn't do a 1, 2, 3, 4 pattern. It had no momentum, right? So it just kept selling off. And then one day we wake up and we go, oh, it's in play. And then what happened, I was like, okay, this is either going to be a pop and flop, or it's just a big pump and then it dumps and it continues to die off. So I sold a little bit up in here. But then one thing we noticed is it ramped up. It wasn't over. So we had another breakout trade from here. And then you'll notice, it went crazy, right? It went from like 30 cents to $3. So did 1,000x, pulled back, and then, that's basically the story of Ripple. The point is like when you get in a coin that looks like it's in accumulation mode, that doesn't mean that it's just going to turn around and go nuts right away. Okay. So going back here, what could happen here is something similar. Let's say this is just a little pop. Let me do this. Let's say this is a little pop, but it can't get legs and it just keeps fading off. That's fine. I don't care. Okay. The only time that I'm really going to start looking at this and quote unquote manage risk with mental or hard stops and actually go into trader mode as opposed to accumulation mode is if we start doing something like this, where we get a breakout and we get, we retest this prior resistance, turn support, and then we get a breakout. So really, I'm not going to get aggressive until probably in this zone, right? Like, because at that point, we'll have a higher high, we'll have a higher low, we'll have confirmation of an early trend. So I got in a little bit early here, but I'm okay adding higher if this looks like it's going to turn into a true bull cycle that, again, we don't want to underestimate. Now, with that said, fundamentally, a lot of stuff would have to happen. And I can't really paint a picture of exactly what that looks like, but probably it would look like, kind of what we talked about with market sentiment turning bullish, news articles, more adoption for Tezos, people looking and maybe capital flooding from Ethereum into this, right? Like there would just be a story, a fundamental story that we would look at and say, oh, these are all the components of that story, and it makes sense why this is happening, right? So that's just how I tend to think through possibilities and probabilities, and then I map out a plan based on that. Does that make sense, guys? Everybody with me on that? Everybody see kind of the bull case, the bear case, how I think through things from a fundamental perspective and how that would translate on the charts? Everybody good on that?
Absolutely. Yeah, and in relation to what you're saying on the fundamental catalysts, I kind of have like a similar mindset in that. And that if a project, because like another thing that I actually respect about this project is there's a lot of big crypto projects out there that are even higher market caps and more volume or whatever, where the technology is actually subpar and it just has a lot of marketing hype and money behind it, right?
Yeah.
And there's a lot of those out there. Apparently EOS only has like 2 full nodes, right? I don't want to point fingers or anything, but
Yeah.
there's just like some really shitty tech out there that's just patchwork and very centralized, right? Decentralization for me in crypto is a very important metric and feature for a network, because for me it's like, what's the point, right? Like, banks
Yeah.
work fine, centralized servers work fine. If we want to do something centralized, we don't need to reinvent the wheel. But in this regard, I kind of value decentralization. But not just that, like, is there a unique value proposition that's like a paradigm shift, a game changer for the industry? And so what I love about that is that this project doesn't actually put a lot of energy into marketing. They put more of their money, and they still have a lot of their capital from the raise. And a lot of ICO projects, remarkably, have already burned through all their millions. So they're actually managing the money all right. They're giving out most of it into grants towards education and development, which in my opinion, for a decentralized network or project, crypto project, that's the right place to put the money in. Because if you build something good enough, that's an innovative enough, and that's a new paradigm, then guess what? You don't really need all the fluff. The marketing will speak for itself, because suddenly what'll end up happening is people are gonna have articles on it. Like, if this vote works out, they already voted. Once they integrate that into the network, guess what's gonna happen? Whole bunch of media outlets are gonna report it without having to pay a
Yeah.
single marketing dollar. Reason being is because it's newsworthy. It's innovative. If they don't report it, they're actually missing out on some cutting news on fintech in the crypto space. So like,
Yeah.
if the technology is innovative enough, it'll really speak for itself. One sec, can you lower your screen for a bit? I'm just gonna drag it over for the
Yeah.
1 sec. All right, go ahead.
Cool.
It'll speak for itself, and without having to, like, oftentimes the thing is that if you have tech and it's either vaporware and you only have a white paper and you don't have anything for it, or it's just like super centralized, or it's just a copy and paste, so tweaking some parameters, then you have to spend a lot of marketing dollars. You got to pay for the sponsored articles on Forbes and their little media packages and all that stuff, because it can't speak for itself, right? But if
Yep.
you create something innovative enough, it just becomes newsworthy, and suddenly you just get all of that for free just from building something, right? And
Yep.
and so, Ethereum was very Bitcoin. Bitcoin's obviously the most successful crypto project in history. How many marketing dollars went into Bitcoin? How much
Right.
money did the CMO of Bitcoin spend on? Oh, wait a minute, Bitcoin doesn't have a CMO. Oh shit. Okay. Right. And
It's
now
had
everyone.
several CEOs that have either died or
Yeah. Yeah. Apparently, one of the CEOs died in India recently or something like
yeah. So one thing I wanted to kind of show is how I scale into trades. This is something I got a couple questions on is, whenever we're looking at an area and say you're trying to trade like pretty big size, how do you get in without spiking price or like getting a really bad fill? So, and again, we have a lot of lessons on this in the boot camp, but I'll just do something pretty quick right now. It depends on how deep the order book is and how much activity is happening. So like right now, price is pretty slow. Real quick, can you guys see these numbers on the order book and the time in sales right here?
Yeah.
Is that coming through clearly or? Okay.
Yeah.
Okay, cool. So here's what I'll do. So whenever I'm looking at a chart or a market and I'm like, okay, I want to move into a position, I'll think about it in terms of US dollars. Okay. So let's use a relatively small amount. Let's say, an initial entry of like, let's just use like $10,000 as a round number of like one fill that you're trying to get into a trade. So one thing you can do here is look at kind of the market depth, and you can zoom out and like group these orders by like area. So here's kind of the components of this. So you have the last price that's traded, right? So actually let's make this a little easier and just look at a USD chart. This will just make it easier for math's sake, but it kind of works the same way as you know, if you're trading a alt BTC chart or something else. So let's say price is $69 or 69 cents. So 10,000 divided by 0.69, that means you've got about 14,500 coins. Okay, so let's just round up. Let's say you're looking to get in 15,000. So you know initially the order book is pretty decent here. You can get a fill of 15,000 without the price going too crazy, right? So you've got like 69 and 15ths all the way up to like 70 cents. So you're probably going to get a fill closer to that. So just looking at this, I know I could get, you know, say 10,000, 20,000, 25. I know that my order or this market could handle about $20,000 to $30,000 without getting too much slippage, right? Does that make sense, guys?
Yeah, and one thing I've noticed, because I've been watching the Tezos volume and order book for like literally months since I started getting interested in it, and I've noticed that with the volume, also the liquidity on the order books has increased recently. It's gotten a lot better because it was a lot thinner than that.
Yeah, and that's the big difference between a market that's in accumulation mode and a market that's what we call trading with conviction, right? When it's trading with direction and conviction, the liquidity is a lot better. That's why, so slippage is where, like, say you're trying to, Derek, you're trying to buy at 69 cents, but let's say that the ask orders up here are thin, meaning there's not a lot of people that have sell orders there, and say you try to buy a market order of $50,000 worth, that's going to spike the price up. You're going to take all of these limit orders and it could spike up to like 75 or 80 cents, right? And that's what typically happens in crypto. Why it's so volatile is you get a lot of people that really don't know how to trade, meaning they don't know the most efficient way to execute orders. And they're like, yeah, I'll just put in a big order. I'll just put in a big market order. And then what ends up happening is it spikes price. And they're like, wait, what do you mean? I wanted to buy at 70. Why did I get a fill at 80? Right? That's what slippage is. Yeah, fat fingers, David. Yeah, so basically the most efficient way, and this is how I do it and why I typically get fills, is when a market is close to a breakout, if it's fairly liquid, I'll think about that number. It doesn't matter if it's 10,000, 50,000, or if I'm trying to get an order of $250,000. I'll look at what the order book can handle, and then I'll try to get in a way that won't spike price or spook people to where like all the sellers pull their orders, and then all of a sudden price goes against me and I have no option but to buy higher, right? And again, this is a much deeper lesson that we cover in the boot camp, but I wanted to talk about breakout areas specifically, and also how to get in with size. So that's kind of a breakout, is like I'll look at the area, and like let's just pretend that 75 is a major breakout level on the daily chart, and I'm like, okay, I want to get a fill around 75. You know, maybe I'll scale in a little bit ahead of time, and I'll have some stop orders above, some stop limits in case it spikes through. It'll fill me, right? So I know that 75 is the break. Then what I'll do is I'll look here and I'll say, okay, we've got pretty good liquidity below 75. So we've got like 35,000, 40, 45. So I know, so what's 45,000 divided by 70 cents? It's about 65 grand. So if I know I'm trying to buy $50,000 worth of this, that I can do that unless these are fake orders, right? Like some platforms you can actually put fake orders in, or say you start eating at these ask orders, meaning like you bid and you hit 5,000 of this 35,000 block. And then let's say the 30,000, whoever's there pulls it and they're like, oh crap, I think price is going higher. I'm going to pull my limit order, my ask. Then the order book can become thin. So there's a lot of games that get played here. It can get kind of confusing. The best advice I can give you guys is learn the basics of how to do this and then go in and practice. Set up like some practice account and just find coins that are trading pretty good liquidity and go in and do this as an exercise. And again, just do it with very small amounts just to get practice. Like don't trade for real, just practice. And if you lose a few dollars or make a few dollars, it shouldn't matter, right? It's a good skill to have, especially when you start slinging size. And it gets even harder when you're in accumulation mode. I shouldn't say harder, it's just slower. So like if I'm buying, and if you guys ever hear me say like I'm accumulating, that means it's real slow. I might set orders, multiple limit orders around an area, and it might take days or weeks to get those filled. Because the last thing I want to do is go into a thin market and say I want to buy $100,000 of a coin. The last thing I want to do is go in and just try to market buy 100,000 on a super thin order book. That's going to spike price like crazy. I'm going to get a ton of slippage and it's going to scare a lot of people away from the order book. But if I can be kind of stealthy with it and scale in over the course of days or weeks, by whenever I see a big block, maybe I'll take a little market order, or maybe I'll set a limit for a fraction of a penny below that limit order. Right? These are just the tools and the techniques that you can have to get fills. And that's why yesterday it took me, let me pull this up. 1, 2, 3, 4, 5, 6. It took me 6 orders to get the size filled that I wanted. And it wasn't even a huge 6-figure position. It was a starter position for me. So even smaller size, where you're dealing with anywhere from like, $10 to $100,000, like even at sizes like that, you need to scale in. Now, if you're scaling in with a few $100 here or there, you're probably not going to have an issue. But when you start to get into the tens or hundreds of thousands, that's where you really have to think about this.
Yeah, absolutely. And I have some fond memories of certain historical breakouts in crypto. Like I remember all that drama with Ethereum Classic and how basically everyone in the Ethereum community got an equal amount of Ethereum Classic. And then like initially all the Ethereum haters were bear whales and they're all dumping it to the ground and they wanted it to go to zero, but they created such an extreme imbalance in price by dumping it. So much that it actually gave a really good deal for traders and investors. And then as it was breaking out of its accumulation range, I remember there was a bear whale who created a wall of like several million ETC at like $2. Just like, you shall not pass this wall. And I remember watching it live, traders just attacking the wall like a pack of hungry piranhas. And literally like destroyed the wall in like minutes, and then it broke out and went nuts. Like it's good times.
Somewhere down here.
Yeah, pretty much. Yeah, there was like that close to the $2 range. There was like this breakout, and it was just beautiful to watch. And and
that's the thing. Like the level 2 is really fun if you know how to work with it, but it can be real noisy and real distraction. But yeah, I mean, you can find stories like that where there's like one guy sitting there going, you are not going to get past me, and then there's somebody else that's like, hell yeah, I'm going to eat those orders. and that's a beautiful thing about the markets is like, for every buyer there's a seller, and for every seller there's a buyer, unless it's super thin and the market's not doing anything.
Yeah.
That's why we only like to trade liquid markets that are trading at least several $1,000,000 a day. Otherwise, if you're trading any size at all, you're going to get slippage and spikes and all kind of weird shit.
Yeah, and I find that there's always like, in 2016, I always have like a pet coin or pet project that I like that I usually go a little heavier than the others or some of the others. I remember because of ETC and all the stuff happening, because it was probably like one of the most exciting things happening in 2016, aside from the Ethereum rally. That was pretty cool. I just remember we were accumulating that for a while, and it was almost like the same story as Tezos, although Tezos hasn't broken out or anything yet. But it was like made a bunch of money off of it initially. Tezos didn't really have that story because the pre-market before this was just paper contracts. It wasn't like real supply till the mainnet came out, so it wasn't quite the same. But I remember with Ethereum Classic, made a crap ton of money very quickly in the first few days, and then we were accumulating it, and it was just this long drawn out, kept dropping lower, and then I started averaging down, and it went sideways, and it was just kind of really a little bit frustrating when it went sideways, and then it started breaking out, and I started adding to my position on the breakouts, and I just, I was like accumulating it around the dollar mark, and the thing popped off to $55. Now it didn't perform as well as some other coins, but it was still pretty decent money because I went in a bit heavier on that versus like some other stuff, and I traded that market fairly well. But it's always like the typical story if you have a project and accumulation is it's not for everyone. It definitely requires patience. You really got to make sure that the project's going to live and that you're not accumulating the wrong thing, right? Because you could accumulate, and sometimes that'll happen, right? Like you could accumulate something and think it's going to have a cycle, and then it just dies, or the founders run off. And that's why I'm not the biggest fan of microcaps, because they have a higher rate of failure. So and they're super liquid, so you can hit a real home run in a market cap with low market cap with ridiculous returns if you hit the right one. But I almost
but Rocky, like you said too, like there's the risk of like failure, but there's also like on those micro caps, like even if you're looking at massive like percentage gains, if you're trading any serious size at all, like it's going to be so hard to get those fills, right? So like if you're trying to make a few $1,000 here or there, maybe, but if you're trying to make millions, like good luck.
Yeah. It's gotta be like that real gem microcap. Like every now and again, you'll almost like, and this is not the norm, but every now and again, you'll kind of almost hit like the shitcoin lottery, where if you pick the right microcap, it's almost like you got to diversify. But it's almost better, like the microcap game, in my opinion. One has to definitely have a good fundamental grasp to try to pick the better ones out of the dog shit. That's number one. And then number two, I think it's better to like season and sprinkle and diversify. So if like 8 of them fail but 2 go nuts, then those 2 will make up for it. And I've tested this.
Mm-hmm.
And generally, if you get one that's a real treasure and it ends up on page 1 on CoinMarketCap or climbs up a few pages in market cap, then generally what can happen is the volume and liquidity can pick up if it turns into a thing. I remember I experimented with this because there's some investors out there, and I know some of the investors on crypto Twitter who absolutely, like, they're obsessed with microcaps. Like that's their niche, right? And like they'll mine these experimental coins and shit. And I've experimented with it. I think this one point I actually I think I probably invested in like 8 things on Cryptopia, and literally like all of them died except for one that went absolutely batshit nuts. And I actually went up like over 30,000% returns, right?
Is that the one you made 80 grand on and then it got locked up or something?
Yes. So I still, even though I won, I still lost because it was Expect. So it was called Spectre Coin. So I think I put in like a few, like, I don't know, it was like a few $1,000s in it. It wasn't much. And then
Yeah.
next thing you know, it did well. It survived to the parabola where Bitcoin and everything went nuts. And so it went nuts too. It wasn't super liquid, didn't get a ton of liquidity even when it got nuts, but it was up like 30,000%. And I was like, oh crap, I should cash out. I'm gonna cash out. I did the math. I'm like, crap, that's 80K. I'll take it. And then I go to log into the exchange that I left it on, and my coins were down. I was like, what? And they delisted it, and they delisted it. So then I go to email support, like, hey, give me my delisted coins or whatever. And they're like, oh, we're on vacation for the holidays. We're not answering till like a few months. It's like, you piece of crap exchange.
Yeah. So there's the risk of crappy projects on crappy exchanges. And, you know, guys, be careful of like these guys on crypto Twitter. Not most, I'm just going to be conservative and say some of those guys that are talking about microcaps are actually running like illegal pump and dump schemes. So be very, very aware and cautious of who you're listening to. And anybody that's like day trading in and out of microcaps, that is some sketchy stuff, man. Just be very, very careful, guys. That's why we're swing traders and we like look for real moves, because unfortunately in this space, it's kind of similar to the whole penny stock game where you have a lot of scummy people that come in and they like pump coins and then they dump them 2 hours later. And it's really ugly. And you know, if you try to follow that, you will get dumped on. You will lose money. I guarantee it. And that's another reason for just trading liquid stuff and holding for longer periods of time. That's what real traders do, unless you're like a high frequency person. But just, again, stay away from the illiquid stuff. There are 1,000,001 reasons why you could lose money there.
Yeah, exactly. There exactly to what you said. You know, I think there's like two types of traders, crypto traders who would, or investors who would trade something a little bit illiquid, less liquid. There are the sketchy ones who will buy something illiquid and then shill it to their thousands of followers and then immediately turn a profit based on that action. And that's pretty dodgy and probably illegal. And, you know, would probably catch up with them anyways and not even worth it. And then the ones that I would respect a little bit more are the ones who are kind of a little bit more into the tech, a little bit more enthusiastic about the projects, and will literally hold projects for years until, if they find the right ones, until they turn into something interesting.
Yeah, that's the thing. If you're fundamentally invested, like mentally invested, and you're literally holding coins for months and you're treating it like a true investment, that's completely different than, you know, buying on a shitty exchange, pumping it to your Twitter followers and then closing as soon as you send the tweet, right? Like,
oh yeah, and there's some leaks. Someone wrote an article, there's a leak about a bunch of people conspiring to accumulate this illiquid coin and then chill it out and all this crazy stuff. And just stay away from sketchy stuff like that. And that's, you know, even for myself, like that's why even especially on this market cycle, like I've learned so much from the previous market cycle. And just my game plan is, it's more of like it's a longer game plan. It's a bigger game plan. It's one that has less paperwork and taxable events. And it's one where I have certain price targets in my mind. And I'm just going to patiently wait till those price targets hit. If they don't hit, then so be it. They don't hit. What can I say? If they do, then I know exactly what percentage I'm going to take off the table at each price level. And I'm going to, because like that's a very valuable lesson I learned in the last cycles. Like I did very well trading, and there are some markets that I traded perfectly, bought very low to the bottom and sold close to the top, or traded along the way, like stuff like GNT and stuff. But then there were some projects that I sold way too soon. And so for me, it's like, I don't know where Tezos is going to go in price. I don't know if anybody does know, but I have initial price targets as investment. And what I love about it is just baking, right? So it's just giving me more Tezos just by holding it. So I kind of like that. But my
Yeah.
first major target is around $10, which would put it at like 6.5 billion in market cap. Other projects would likely climb in market cap as well. If that were to happen, I would anticipate we'd be in a greater bull market unless Tezos kind of pulls off on Ethereum and has its own market. Because one thing Ethereum did in 2016 is it just kind of took off and had its own private bull market in 2016 and went up to 20 something dollars. And other markets didn't necessarily do that the same way Ethereum did. So Ethereum was definitely like the big winner of 2016. And then even then you think, wow, $26, 30 cents, $26, that's pretty nuts. And then never in my, if you would have asked me if I would have thought it went to $1,400 in 2 years, I would not have believed it. I really wouldn't
Yeah.
have. It
So
definitely,
Rock, just thinking about like a future scenario, if Tezos did something like that, like that would probably mean there's another, crypto bull cycle in general. So like all tides would kind of be rising, or at least, the good ones.
yeah.
And that would probably land it somewhere in the top 5 or 10.
Yeah.
And if it was looking at like a 6, like as of today, like say it went crazy and went to 10, that would put it in the 4th spot.
Yeah. The fourth.
So where is it now? I think it's 20 something. Yeah. It's 20 today. So that's a big jump. That's a big jump in dollar value. But as far as the leaderboard goes, it's not out of the realm of possibility. So, yeah, I don't know, man. I wish we could just fast forward a year just to know.
We will. And in a few years' time, for those who stick around, we'll go back and remember back in 2019,
Yeah.
we're yammering on about Tezos, or maybe if all goes well. But if
we'll be like, hey, you remember how, we were talking about a $10 potential target if it went nuts, and then XYZ hack happened, and then now it's worth 0.
Yeah, now it's worth like 2 cents, and I'm eating ramen noodles out of a shopping cart.
And hey, that's why position sizing is key.
If I look at the market cap of Ethereum, for example, I think its top end market cap was 133 billion. Right, 134. I think it was, it was like 100, and it might have even made it a little bit higher than that. Let me just. No, I think that was its height. It was
135. Yeah,
135 billion. Right.
Now it's 50. Call it 15. Yeah,
15. So when I say like a $7 billion market cap, like, Ethereum right now is 14 billion, and this accumulation, or this lower end of the bear cycle. But if you compare it to peak values in the last bull cycle, if you compare 7 billion to 133 billion, that's actually not that much in comparison. Yeah. And I believe that if it continues on its trajectory without too many hiccups, that it could actually be an Ethereum competitor, like literally go toe to toe. So I have that as my first price target. I think if it delivers on what it says it's going to do, and if it succeeds, because this is why I always say because this is uncharted territory. It's unprecedented. We don't know because it's never been done. Therefore, we actually don't know if it's even possible. So that's the risk. The risk is it fails horribly. There's all these unforeseen circumstances we could have never anticipated, just like there's all kinds of glitches in Ethereum. And then hell, sometimes you get these massive debacles and black swans, like Ethereum did. It had multiples, and people thought that would be the end of Ethereum, and it still melted people's faces off, regardless, in spite of all those issues. So my opinion, if it actually grows and does what it says it can do, who knows? Like it could even possibly even see market cap similar to what Ethereum pulled off in the next cycle. We don't know, but I'm definitely keeping that as a possibility in my mind, and I will definitely have some Tezos on the table in the event of that possibility. I won't be going all out at $10 or whatever. If we hit $10, it'd be definitely a nice chunk of pay. But I would realistically, like, maybe I'd sell like a quarter or or, at that point, the passive income on XTZ will be nuts anyway. So
Yeah.
sell a quarter and then live off the passive income.
Yo, I was just looking at the 7-day gainers by volume.
Yeah,
Raven. So was it, I think it was a week or maybe 2 weeks ago when it got, after it had this initial, I think it was on this day. What was the 8th, 7th or 8th? Yeah, it was I think it was on this spike. We kind of marked up what the 1, 2, 3, 4 pattern would look like, and it gave it to us. I just missed it yesterday. I wasn't paying attention because I was looking at Tezos. Did anybody buy this? I'm just curious if anybody did the 1, 2, 3, 4 on this one. Yeah, because this, again, just recapping what happened, it went down to pre-bubble prices, accumulated, had its first ramp.
Yeah, check out, just like you're pointing out with the volume, check out that volume increase on the breakout of the lower range.
Yeah.
Right, that initial push out of the lower range.
Yep.
Buying interest coming in, the momentum.
Yeah, I wonder how real that volume is. Let's see.
And that's Bittrex, right? That one that we're looking at Bittrex. So
yep, yeah. Oh wait, is the chart Bittrex? Oh yeah, it is.
So that would be legit.
Binance, Bittrex. Those are the two that I look at. 38, so 42. Yeah, it's got in between 40 to 50 million real volume.
Nice. Brett's saying that he's in nicely with 1 cent price average. That's pretty good.
Nice.
That's it's 400% plus. That's pretty good.
Wait a minute. What's the dollar value? Oh, it's at okay, 4.5 cents. Nice.
So not bad. And yeah, Raven coin kind of just came out of nowhere, but I guess it kind of goes to show that fair launch proof of work coins are so rare these days. Like new fair launch proof of work coins are so rare that when you actually get one, apparently they do well. So
yeah,
as long as they don't have like ridiculous inflation. Like there was Grim that was all or Grin or whatever, that was all fair launch and stuff, but I think the inflation rate is just off the charts. So it's just been bleeding out a bit.
Yeah, so now that Tezos is on the gainers list, it'll be interesting to see. Yeah, that's what. Okay, so this is what I'm thinking now. So, I'm going to be watching the next few days because it's either going to do something where like we get like a 3 to 5 day run and then it tops out and just spikes back below 55 cents or 60 cents. If it does that, I'm not going to really be interested in adding anything. But if it kind of follows this green hypothesis where maybe it doesn't even go that high, but say it goes up and then it has a lower volume pullback, kind of like on Raven, like we were just showing, and then it starts to ramp up again above 60, I'll probably add on that. And then obviously add on the 1, 2, 3, 4 breakout. But, again, that's the best way that I've found to play early trends. Is like, you don't know if it's going to develop into something big or if it's going to be a pop and flop or if it's going to trend, but then it's going to be muted at the first sign of resistance, right? Those are really the 3 outcomes. And instead of trying to predict, I just respond to what the price action shows us and then have a plan for every outcome.
Absolutely. Yeah, my interesting kind of backstory with Tezos is, I participate in the ICO. I kind of position sized into it. I didn't go too hog wild. So I bought some on the ICO. I want to participate because you never know. It could have been they didn't deliver anything and whatever. And then I was watching it on their futures or whatever exchange it was, where it wasn't real supply, but it went up to over $10 and such. And I was just waiting for it to actually hit a real exchange to accumulate a bigger position because I wanted a bigger position. So I see it getting listed on Bitfinex and going a bit sideways, and started buying some and probably got a little bit too gung-ho about it. The more I started reading into it, looking into it, more excited I got a little bit too gung-ho. So then when it broke down, at which point, to me, I was like very committed to accumulating and getting my average cost down. So I bought a lot more on the drop. But as a result, I'm actually not doing too bad right now. I think the lemons are at the point where it's lemonade, and I'm just kind of waiting for my bigger price targets. So a little bit more of an aggressive approach. And another thing that kind of changed made me go a little bit harder on it was the whole Quadriga hack. As soon as I had that kind of reality check, I decided, you know what, I'm going to pull back from trading a bit. I'm going to take my money off the exchanges and I need to park it into something. And to be honest, I just haven't really found a lot of good projects that really excite me. It's really for lack of, I mean, there's some good ones, but that have already went through like multiple market cycles. So I feel like, am I really going to buy Ethereum at $100 or accumulate at heavy at $90 when I was trading it at like $1 or 50 cents? Not really, risk reward didn't feel as good. And other newer projects that are just too centralized, vaporware, just copy and paste, just not a ton of stuff that really completely stood out for me, right? So
that's the thing in bear markets is we have to be a lot more diligent and picky, right? It's like it's so easy during like bubble markets where like all tides are rising. I mean, it's literally just the most easy thing to like catch breakouts and wait for fib extensions, right? Like just make a ton of money without even trying hard. But in markets like this, I think people that actually stick it out in these markets are the ones that do the best during bull cycles. But unfortunately, a lot of people give up when things are slow, when these are the times to develop skills, practice, study, learn what the hell you're doing, watch for the trends, just put in the work. That way, like I look at it as seasons, like, plant the seeds now so you can harvest when the good times come. But unfortunately, most people are sheep and they just want to do what's popular, right? I'm sure there was a lot of people that read the Wall Street Journal article yesterday bashing on Bitcoin and were like, haha, yeah, see, I was right. I shouldn't have got into that crypto scam, right? Where like the smart people are like, okay, the media is trashing it. Where's the real work being done? Right? What's the next cycle of this look like?
If those shady articles at the bottom after it's dropped like 80-something%, if those aren't the biggest buy signals in market sentiment. I mean,
if 2014 wasn't the perfect example of that, I don't know what is,
Was it the Wall Street Journal who was it that posted everyone's getting rich except you?
Oh man, who was it? Was that Bloomberg or something? I don't know. Okay, cool. So let's go ahead and wrap this up. I had a couple more charts. Just kind of looking. I know we've been talking about HOT. Really no follow through. I know they have their product that they're working on, which is interesting. Just as far as the chart goes. Very interesting range, little pullback. It's holding above on BTC, but I don't know. I don't see anything super interesting there. Zcash is pretty interesting. If we look at the chart, let me kind of clear some of this off. Full retrace back into the $50 range. Looks like let's kind of zoom in more closely. This is, to me, kind of mirroring Bitcoin's price. We've got clear resistance here through, 60? So, if we accumulate here or start to show sustained volume into this level, I might consider accumulating or buying a breakout. So we've definitely got like the 60 to 70 area as resistance. And we are back at pre-accumulation or pre-bubble prices. So that one's kind of interesting. Poly is a STO platform that, man, I'm not really close to this project at all. I haven't talked to, I think his name's Trevor. I know the internet marketing scammer, Ty Lopez, was a part of this. I want to believe in it. If any of you guys are close to this, or if you are in their Telegram group or anything, or if you know anything fundamentally about this, feel free to type it in chat. I personally don't. I've just been watching price, and you can see, I mean, there's just systematic selling here. It's what I call systematic selling, where dump, retest, can't get above resistance. Dump, retest, can't get above resistance. Just like is happening right now. Dump, retest, now it's battling with the 10-cent range. So I don't know if yeah, Florian, I mean, listen, somebody who did what Ty does doesn't have any respect in my book. I get that he's a really strong marketer and all that, but he caused a lot of people to lose a lot of money in crypto. And he's one of those guys that tried to ride the train and ended up just screwing a lot of people. And I don't have respect for that. So anyway, if you guys know anything fundamentally about this, I'm on their list and I've been kind of paying attention to it, but I don't really know what development is happening outside of what they publish on their Medium blog. So,
as far as as far as news is concerned, did you see all this stuff? Jack Dorsey shilling Bitcoin yesterday.
Yes. You want to pull that up?
Yeah. One sec. Let me just shift things around here. One second here.
Yeah, Florian. So when we go back into a bull cycle, we're going to bump up the market updates. You know, right now when things are slow and we're in the crypto winter, you know, it just makes sense to do more in-depth classes, not every day talking about the same thing. But, you know, that's why we have the Discord room too, right? So anytime we have a trade alert or anything's moving, we can talk about it.
Speaking of that article, January 13th, 2018, at the peak, like, and market sentiment, like, isn't this just the douchiest article you've ever seen?
Oh man. And then there was like a counter to that. Like somebody during the bear market was like, now everybody's losing. It was like the exact opposite article. It's hilarious.
So anyway, so this is like New York Times, right? Peak euphoria. Yeah. You know, we've got our cheesy crypto sweaters, and we're flaunting.
I want one of those sweaters, by the way.
Yeah.
That looks awesome.
And now we're in the opposite. Now we're in the oh, it's all dead, and you're all a bunch of losers. Right?
Yeah, exactly.
So I kind of I see that as reassuring when I see articles like that. I'm like, that's nice. That's like soothing. So this is
huge.
So this is the founder and CEO of Twitter. You know, multi-billionaire, pretty big deal. Obviously, someone who's a builder, an innovator, who has capital and resources. So, in my opinion, this is like the biggest news in crypto this week. He pretty much just like joined our ranks and now like full on into Bitcoin and crypto Twitter. So his app that he has, Square, is basically like an app where you can buy crypto and such through it. They're hiring few full-time engineers, and they're going to open source. They're going to create an open source project and give stuff away from free. And so he's got an entire thread here. Basically, you know, last week I was considering my Hack Week project and asked Brockman, what is the most impactful thing we could do for the Bitcoin community? His answer is simple: pay people to make the broader a crypto ecosystem better. This resonated with me immediately, so we're doing it. This will be Square's first open source initiative, independent of our business objectives. These folks will focus entirely on what's best for the crypto community and individual economic empowerment, not on Square's commercial interests. All results will work will be open and free. Square's taken a lot from the open source community to get here. We haven't given enough back. This is a small way to give back, and one that's aligned with our broader interests, a more accessible global financial system for the internet, so on and so forth. He's also into Lightning Network, and he passed the Lightning torch and such. And so it's just showing that big players and innovators, movers, are getting into the game. They want to invest in it. They want to give back to the community. They want to build. They're starting to believe in the vision of it. It's catching on. This is how things go mainstream. Twitter is pretty mainstream. You know, you've got the president as his number one tool for reaching the public right now is Twitter, and that's definitely given its numbers a boost. And so I wouldn't be surprised to actually eventually in the future see crypto features or tips or payments integrate directly into Twitter. And I just, you know, when I see innovators and builders getting excited and wanting to invest and build at the bottom of the bear trend or after the markets have dumped a lot and they're there, that makes me really bullish, because those people build things. They also have a lot of influence, a lot of other investors. They're in their circle of influence, and you know, he's got 5 million followers, runs Twitter, right? That can have a lot of influence. The opposite is when you have celebrities, just like, you know, Katy Perry with her crypto clause, just jumping, not really building anything, and just doing some like cheesy marketing stunt at the top or peak of the bubble. That's that's like a bearish sign. So like just because someone is a celebrity or influential or has a large following doesn't necessarily, or like what you said about Tai Lopez jumping on in the peak bubble.
The trend riders,
they're just trend riders they're doing it for the quick cash grab, or because it suddenly seems popular, they want to get in on the train. But those people don't stick around, right? They don't stick around and they don't build anything. Whereas like when you have a market that's down a bunch, but influential people start piping up, getting more involved, investing more in the ecosystem, and they're more interested in building, you know, they're in it for the big ride, for the long run. And
hell yeah, man. I mean, we talk a lot about price, right? Like that's what we do. We're investors, we're traders, but at its core, like if we look at what actually matters, is stuff like this. Like it's development, it's progress, it's adoption, it's solving problems. This is what drives price in the long term. This is what drives sustainable price growth. Boom and bust cycles will continue to happen because people are just sheep, but like the long-term success is this. This is what we need more of.
Yeah, absolutely. It kind of reminds me of people like Tim Draper in the 2014 bear trend, right? Piping up and speak, you know, some of the early movers that were also early adopters back then, and builders and investors and trendsetters. So I always like seeing stuff like that. It means we have more allies amongst our ranks who are going to help us bring things to the masses, to make things a little bit more mainstream. Like obviously he's got 5+ million followers, very influential, obviously, because Twitter is a very big platform.
And Square, I mean, Square is a huge company now, and you know, like it's this is the type of like adoption that I want to see, is like an innovative fintech company like Square that is trying to do crypto the right way, right? So like on one hand, you've got Jack and Square and open source, right? And he even said, what did he say exactly? We're going to do this outside of our, the third tweet. This will be Square's first open source initiative independent of our business objectives, right? So like he even understands the right way to do this, right? And so Square's market cap is now over $30 billion. So it's a big company. And then on the other side of that, you've got Jamie Dimon and the old guard who are trying to basically build the equivalent of intranets, which we know how those worked out for corporations, right? Like the internet, the decentralized nature of it is what made it successful. But then, you've got these guys that are trying to build JP Morgan coin and all this shit. So it's becoming very, very clear to me the split, right? And like, it's okay to have big companies and prominent CEOs that are in crypto as long as they're doing it right.
Yeah, absolutely. Absolutely. And the beautiful thing with crypto and the decentralization is if anybody kind of goes off the tracks and does something nefarious, they get called out so quickly. It's so hard to bullshit people in crypto. I mean, you'll never see a bigger pack of like cynical people ever.
Yeah,
There's so many
scams. Yeah. Cool.
So yeah,
well, we're going on a little over an hour and a half. Are there any other news pieces that you saw rock this week that you want to pull up?
Just pretty much that and the Tezos thing. I don't know if there was a ton of other stuff besides the usual drama. I don't know if anything stands out for anybody else. I don't quite recall anything that stood out for me. I was mostly kind of just looking at this Tezos thing. So they completed their first vote. Like I said earlier, it's not a huge deal. They're just changing the rules from 10,000 to 8 to be able to run a node, and a couple of technical changes, so that they're not making anything terribly drastic. So it's almost like you can kind of see it as like a live dry run type of thing before introducing anything too disruptive. So that's good. So this is a work in progress, and once the vote's done and once it gets integrated into the blockchain, that's definitely going to create a stir and a lot of media attention and news, because it'll be the first time that's ever happened in blockchain history. So I wouldn't be surprised to see a lot of mainstream publications picking up that story when that happens, which will be a lot of free marketing, get on a lot of more people's radars, and then it just kind of takes on a life of its own, similar to Ethereum, right? This is a beautiful thing, even watching Ethereum grow from a sprout into a tree is, initially with Ethereum, they were just focusing on coding. They had their heads down. The first year, you didn't even have a graphical user interface on their bloody wallet. It's all command line stuff. And then as it grew and more developers came on board and more companies and projects came on board, then suddenly you had the ICO boom. I don't necessarily think Tezos is going to go down that route. It doesn't seem like it's within the philosophy of the founders or the community to just become another ICO funding platform. But looking at Ethereum, when it had its ICO boom, Ethereum got so much free marketing attention from all of these ICOs, right? Because people would launch their companies and their startups on Ethereum, create a token, and then spend thousands or millions of dollars on marketing packages, getting posted on Forbes and all these publications and stuff. There's like these typical marketing packages it can do. And then, but that underlying every time an ICO launched, they're advertising Ethereum. It's on Ethereum. You got to get the Ethereum wallet. You got to buy some Ether to participate. So obviously that just created the right perfect conditions for Ethereum to go nuts, because it was the fuel for that. So it was like supply and demand. And because they had built something that was unique, a unique value proposition, the first Turing complete blockchain, which means the first programmable blockchain where you can have apps running on top of it, it really just took on a life of its own, and they really didn't need to market anymore. It just kind of spoke for itself. and just kind of went nuts that way. And so that's the kind of thing that I'm really looking for, that I'm interested in, is that kind of ecosystem growth and that possibility. We'll see. I mean, time will tell if we'll ever get there, but that's kind of what I'm looking for, gunning for. And I think Tezos will take a different approach. I think they'll have probably a lot. I mean, you can't stop what people put on the blockchain. People will probably still do ICOs and stuff. But it probably, because the ICO space has matured a lot, it's not going to be the same as it was, because new regulations and stuff. It'll be different. There'll be other elements to it. It's a lot of its hype will probably be around, instead of like all these new dApps on top of it, even though you can put dApps on top of it, I think a lot of its hype will be revolved around, whoa, they just had another vote and now it has anonymous transactions. And oh, now it had another vote. Now it's integrated this feature. Oh, there's this new blockchain out there that has these features. Okay, Tezos is going to amalgamate that into it. And just this blockchain that just continuously grows and evolves with all these new features that can just amalgamate the best of every other blockchain. So that's kind of, and obviously there's going to be dApps, probably like security tokens. We already saw that real estate deal where they want to put a few $1 billion of real estate on it, tokenize it and stuff like that. So it's all experimental. We'll see what comes of it. So those are really the main news events that I saw this week. I don't know if anything stood out for anyone else. Someone's asking me, could Tezos hit $1? Obviously, there's no guarantees. Is it possible? Sure, it is. We have seen gains like that in other markets and other crypto. Will it happen? Who knows? I don't know. I certainly do have, I have 10.
Come on, Rock, one Lambo.
Yeah, one Lambo. I have $10, $50, and $100 as price targets. And who knows? I could be off my rocker and delusional, and only time will tell. But maybe in a few years, I'll look back. I'm like, damn, I'm glad I set that $100 target.
Yeah, I think we'll know more during the next bull cycle. Like right now, it's still so early that there's like so many variables that we just don't know, right? So like, let's say we fast forward 6 months and we're like well into like some kind of bull cycle.
Yeah.
Once we look at the fundamentals and the market sentiment at that point, then we can maybe start to form a little bit of a better opinion, right? But it's like, just imagine like Ethereum or Ripple, like we were doing those examples earlier, trying to forecast what those bull cycles would look like ahead of time. We just had no idea. And you don't until they start to develop. So it might turn out that like, 5 or 15 is the number, right? Or like some other number that like once we get closer to something, when it's actually moving, then we go, oh, this is what it looks like. These are all the variables. It's the information we have today that we didn't have in March 2019, right? So that's what really investing is all about for me, is like looking at a scenario as it is today and then looking at the possible outcomes and not putting on blinders or being too restrictive of like what that could look like, but just using recent like crypto history to say, oh, this is what's happened in the past. It's probably not going to look the exact same in the future, but we can extrapolate and like say like, okay, if we do more bull cycles, this is kind of what they could look like. And then when they start to develop, use that information as new information and then make adjustments to our thesis, right? That's the same thing I do with like a startup. I'm like, all right, I made a seed investment of like 25 or 50K. Now they're raising their A round. They've taken their revenues from less than $1 million to 20 million. Now they're raising 5 million at a 50 million valuation. Okay, do I want to add to that winner? That's kind of the same way that I look at these is like, okay, I'm making early bets on projects, and the huge benefit that we have in crypto over like private startup investments is we actually have a price chart where we can see the emotions of the market participants reflected in the price. It's beautiful. So it makes it so much easier trading, quote unquote, publicly traded cryptos than it is like trying to add to winners or investments in startups. It's just so much better.
Absolutely, completely agree. And for my calculations, in order, so we don't know if it will ever hit those prices, but for the types of conditions we need in order for it to hit those prices. So let's say Tezos hits $100, and let's say it has a little bit more supply. Let's just round it up to like a 700 million supply. That would be a $70 billion market cap, which, to give folks an idea, would be about half of the market cap of what Ethereum hit at peak levels in the last parabola. In my opinion, in order for something like that to happen, Bitcoin would most likely have to break out of the all-time highs again, start go in another whole cycle, maybe go parabolic. And I think that the overall greater market cap of crypto as a whole would have to breach the $1 trillion market cap. We'd have to get to at least over $1 trillion. We got to about 800 billion, I think, in the last cycle.
Yeah.
I personally believe that crypto as a whole, when it hits like mainstream saturation and a lot of people having their retirement accounts or whatever, I think a lot of projects will die. The ones that survive will rise to the top, and you'll have most of the market cap in the top winners. And I believe that maybe a top end, we might see a market cap of about 5 trillion in total when comparing that to other asset classes. Like I think gold alone has a 5 trillion market cap. I think crypto has the possibility of doing that if it succeeds, right? In that growth. If it doesn't succeed in that growth, I think it's good enough that it'll always remain a niche market and will always be around. But as to whether or not it will continue on a longer term bull trajectory of having multiple all-time high market cycles, that's up for debate. But in my opinion, I'm kind of treating, if we do get a market cycle, in my mind, I'm going to treat the next one almost like as if it's the last. Like I'm going to plan as if it's the last one. And it might not be, and we might not even get one. But in my mind, according to my investment plan and thesis, like that is, I've made some good bank on the last cycle, start from nothing, made some good bank on the last cycle. This cycle, I have more capital to invest than I did on the last one. If we do break into new highs, that's where I'm going to hit the major cash out and basically just treat it like my last. And who knows, if we have another massive parabola on Bitcoin like we had before, I might just permanently retire, just cash everything out, and that's it. That's just me, right?
Win 100K Bitcoin, Rock.
Kind of that type of scenario. And this is all a hypothesis. It's all speculation. We do know that these things are certainly possible in crypto. And we also know that people can get terribly wrecked on crypto too. So yeah. You just gotta ride the waves appropriately. And I personally don't think it's going to top, like we're at 200 billion market cap. I think we have a lot more growth left, just based on the fundamentals. Like market cycles are one thing, the technicals are one thing. I like looking at the technicals first and foremost. But if we were at these kind of like sideways lows, possible accumulation right now, or there's massive drops, 80 to 90+% drops, and we didn't have I wasn't seeing so much growth in the industry, if I wasn't seeing evidence of a lot of new players coming on board, large players, builders, investors, stuff like that, if I didn't see that kind of same fundamental growth, and if the growth really seems stagnant and dead right now, then I don't think I would be as bullish and enthusiastic. I'd think, okay, maybe we were in our own little niche bubble fad, right? But the crazy thing is, and I saw the exact same thing in 2015, is that you get these low prices, this boring, choppy, sideways market, but you just keep on getting hammered with tons of news about new projects, new companies, and large investors and players wanting to build things and contribute. And you see these low prices, but these really bullish fundamentals, and that to me is like my sweet spot. That's the part in the market cycle that I love the most, that I get the most excited about, is when the price is low and kind of dead, but the fundamentals and the momentum in the industry just keeps growing. Like we saw in 2015. Just go back and look at some of the media articles in 2015. Aside from the fluff, like when articles come out and they have these fluff pieces about people getting rich or wrecked, that's just fluff. That's just bullshit. They're just trying to like it's clickbait. They're trying to get clicks just based on market sentiment. They're trying to appeal to the greater mainstream and what's popular. There's not really a lot
those
of
are the same
substance.
things as like every article that talks about price action, right? Like I never, ever, ever read any of those articles that are like Bitcoin breaks 4,000 for the first time in 93 days. Why did it happen? Like those people have no clue what they're talking about.
It's true. It's true. There's so much fluff there. So, but it's the building. It's the building.
Yeah.
It's the innovation. It's the industry growth, and it's also the financial products and services that are getting built around it as well. And that's important. The on ramps. How many on ramps do you have for the mainstream to get involved, right? And then once you have all of that in place and everything's low and cheap, and you have that sideways accumulation, we start to see volume pick up, like Chris is showing. You start to see the breakouts, and you start to see momentum, higher lows, and then higher highs. And then you'll start to notice it. If you've been on social media, you'll notice a very interesting uptick in new users. And if you've been around for a few years, you'll see the new users and you'll see the metrics grow on social media. And then you'll start getting new users coming in. Target, like the one thing that really stood out in 2017 is like random people are coming out of nowhere asking us for targets and where we thought prices were going to go, right? And I think everyone's targets just, no one hit their targets, right? Because I think things just went a lot higher than a lot of people anticipated. I think actually Tim Draper was like the closest to nailing it, because he predicted $10,000 by 2017 when it was like 2015 or something, and so he got pretty damn close to that target, which gave him some serious street cred. But even then, right, he could have easily been wrong or whatever. But you'll notice it. You'll notice an uptick in new users, and then all with that comes new scams, new scam bots that, hey, send me 10 Ethereum and I'll give you 20 back type of crap, and you just see it in the metrics. And like we certainly have our pulse on the metrics, Chris and I. Chris has his YouTube channel. He can see a lot of back-end metrics just in his Bitcoin videos that he created in like 2014 and 2015. I've got in his website, I've got my website, we've got Twitter and stuff and those kind of metrics. And so like when we start to see a serious uptick in users, because we're just dealing with supply and demand, we're definitely going to let you guys know, right? And it does start to become quite noticeable, but it's slow. Like, don't expect that we're just going to go right into a 20. If we do hit another market cycle, don't expect we're just going to hit a 2017, because we had a full year of 2016 where it had to reclaim all the lost space, all the lost real estate. Bitcoin had to reclaim from $166 and crawl its way out of the gutter up to retesting $1,200. And that took like pretty much all of 2016 to do. And then at the end of 2016, it was testing those levels. And then as it was breaking out at the beginning of 2017, that's when we really start to see a spike in growth metrics that we hadn't seen in previous years. And it started to build momentum and start to snowball until it just went batshit crazy in December. And then growth metrics were just off the charts. Right? They were just off the charts. Like I was hitting I wasn't even writing articles on my website. And I was hitting record breaking traffic stats on articles on Litecoin that I wrote in like 2016. And, cause I had good SEO at the time, good search engine optimization. People were like, Litecoin was on a tear, and people were Googling, is Litecoin a good investment? And then my article would pop up. And so I was getting record-breaking traffic stats on an article that was like 2 years old, right? But when you see that lining up with the price charts just going straight up vertical, it's time to cash out and take some chips off the table, even if you don't go all out. And so anybody who's still with us, I mean, congratulations. Anybody who's been here through that parabola and this bear trend and stuff, you've all learned very valuable experiential lessons in the markets that you can't really learn anywhere. Like, we can go on about our stories and stuff, but like when you're in the trenches and you see it and you feel it and you go through it, like if you've been through that 2017 parabola and you see another parabola in the future like that, it's gonna scream at you, right? Just don't get too greedy. And that's one of the main reasons I was so certain that we're going bear once we are reaching the 10K mark, was I saw it all in 2013, right? I saw that crazy parabola and I knew how it felt in that peak euphoria and all that stuff. And this was like that times 10. It was on steroids. And it was just like screaming that the market was going to go into bear territory. Now, how one manages the bear is an entirely different story, because obviously a bear trend can take a while to play out, right? So just remember what it was like and go back to the charts, and don't forget those fractals and stuff if and ever in future we end up in a similar situation. And just don't get too greedy. I think the biggest, even with a lot of the OGs who were around and experienced 2013, one of the big common things that I've noticed is that a lot of people just got too greedy. Like, they just kept on trying to put their money back into the markets instead of just pulling out hard profit out of the market entirely. And like when you get a parabola like that and everything's correlated, you don't really have many options to hedge. Like you could pull hard money out into the bank or keep it on exchanges, or you can short. Those are your options. They all have their ups and downs.
And Rock, one thing I want to add, I see quite a few comments coming in. So like Ian said, I joined in May 18 and then bought, D said sold at 2,500, joined here in February 18. Dope. Charlie said, you guys were one of the few that said it's not if, but when a retrace. So here's one thing I'll say, guys. Like, if you came in at a bad time, that's okay. Or if you made a mistake when you first got in, that's okay. Most of us do. Like, I'm trying to think of some examples, but like from like 2013, there were a lot of people that bought on the first bubble, right? They bought at anywhere in between like 700 to 1,000. And then they capitulated at like 200 or 300, right? So the numbers are just 10x what they were then, but it's the same story. Most people get their entry into this space by losing money or like by screwing something up. And that's okay. And I just want to commend you guys for being here, because that means you're really interested in doing it the right way, right? And learning how to be on the opposite side of that, which is very uncommon, right? That's why like 90-something% of people in financial markets either lose all their money or severely underperform the markets, right? And so if you're here and you're developing your skills, like this is the time to do it. And I'll just say, like, I remember 2015, like I know some of you guys in the room right now were with us then, but you guys remember how slow it was and how people just didn't want to be a part of it. And that's when I wrote my Bitcoin book, and I went on like this speaking tour of like trying to convince people that like, hey, crypto is where it's at. This is where the growth is going to be. This is the best market to trade. But it's hard to get the mass majority of people to buy into that when the current picture is ugly, right? And I feel like that it's very similar today. But if you put the time in now, this is the planting season, right? Like I said earlier, this is when you plant the seeds for the harvest. And not saying that we're going to get another bull market just like we saw before. It's likely going to look very different. And unfortunately, it's not on our own time frame. It's going to happen whenever it happens. But the good thing about the markets is there's always another trade, and there's always other things you can do when things are slow to grow your wealth. You know, if it's trading stocks or doing real estate or startup stuff or building online income streams, like there's so many things you can do to be productive while you're planting these seeds at the same time. So
Absolutely.
yeah, that's all I got. We're coming up on 2 hours. Rock, you want to wrap it up, or you guys have anything else?
Yeah, I think that's pretty much it on my end. I know we kind of just focused on a few niche markets right now for this week, or just a few news pieces. Obviously, when something changes throughout the week, we'll look at and address other markets and other news pieces. But yeah, you know, no matter what, you know, making mistakes is okay. It's a part of the process. Even if you're a rock star and you know you're banging out winning trades left, right, and center, there will come a point where you'll tilt. And you know, I've even had my tilting point at the last quarter, Q4 of 2018. Managed to bear trend fairly well, but kind of tilted a little bit in the last couple quarters. And that's fine. And then you got to know when to take a step back and take a pause, because you don't want to keep tilting, right? So that's a part of the process as well. But also knowing that you always still have to manage risk even within that. You know, never obviously put in more money than you can afford to lose. You know, that's why I'm not a big fan of going into debt over crypto. That's not why I'm not a big fan of going all in or putting, even if I go in heavier and get aggressive on a particular project that I like, or from accumulating something or a certain trade. You know, I'm calculating you know, what's a big enough size that it can take me to the next level if it does what I'd like it to do, but not enough to completely ruin me, right? Certainly if you go big enough size, it'd certainly be a good kick if it went to zero. And that's just me. That's my aggressive approach. But some people's aggressive approach is literally, and you know, in 2015, I was literally all in crypto, but that's because I didn't have a lot of money. So, you know, it's if you're just starting off and you got to build the capital and stuff, then, you know, because I didn't have a ton of money at the time, I didn't have as much to lose. So I was a little bit more all in, and that was kind of my life and my passion at the time. So everyone's got to decide that for themselves is good for them. But as long as whatever losses, if you do take a loss, or if you do tilt, or something happens, or some black swan unforeseen event, as long as whatever you put into it doesn't ruin you or cause you a huge degree of anxiety or mental stress, right? You don't want to ruin your life over this stuff. So you really have to temper greed. That's a big thing, you know, greed and fear in crypto, obviously, but you really have to temper that. And a lot of fortunes have been made in crypto, and a lot of fortunes have been lost in crypto because of greed. So obviously, and another big lesson that I've learned, and I keep repeating this, but literally more money in crypto is made in patiently waiting than in doing stuff. Right? It might seem boring, oh, Rocky's just, you know, he's not doing anything. Why isn't he doing all these trades or whatever? You know, let's talk in a few years. Let's see what happens in a few years, right? Maybe it doesn't work out, but maybe in a few years I'll look back and I'll be like, man, I made so much money in doing nothing.
Yeah, it's just like hunting, right? You know, we talk about this analogy a lot where, you know, they call it hunting, not shooting, or with fishing, they call it fishing, not catching, right?
Yeah.
Most of the time that you're hunting, I went deer hunting for the first time last fall.
Yeah.
And it was funny because I had been, you know, using this analogy for several years, but I've never actually been deer hunting. So I'm sitting there in the deer stand. It's dark, the sun's not even up. And I'm kind of laughing. I'm like, okay, this is what it's really like. This sucks. It's cold. It's so boring. It's dead quiet. I enjoyed being in nature, but I'm come on, man, where's the deer? And it's true. It's like sat there for a couple hours, nothing happened. Then did an evening session, nothing happened. Then the next day did a whole nother day. So it was like 2 days of nothing. Then on the third day, you guys are gonna like this. The third evening, which was basically the last time I was gonna be sitting for a session, like for 3 or 4 hours at a time, basically do it in the morning or in the evening. And the last chance I had, the sun was going down. Sure enough, 2 deer come walking right past my deer stand, and they walked right out into this field. It was about 100. It was pretty far for me because I'm not like a marksman. I take a shot and I miss. So I waited 3 days. I took a shot and I just laughed. I'm like, that's basically like, being patient, like waiting like 3 weeks or 3 days or whatever for a trade. And then you get up and then you miss the breakout or you don't get a fill or something happens. Like that shit happens. That's real life, but it's okay. You don't get pinged for the shots that you miss. You only get rewarded for the ones that you hit. So there's a lot of carryover there.
Yeah, that's like my Spectre coin. I buy some like a liquid shit coin. I wait for half a year. It goes up 30,000%, and oh, too bad, so sad. You don't have it anymore. They delist it off your exchange.
Exactly. Charlie said, I thought you were going to say no ammo. The funny thing is, the reason why I missed is when I went to pull the trigger, I thought the safety was off, but it was actually on. And then I got flustered and ended up missing. And yeah, I don't know how I feel about killing animals. All I know is my cousin makes use of every part of the animal and we actually eat it. So I feel good about that. But yeah, I don't know. It's just funny. The idea of like being patient and just all the activity comes down. Like if I were to look at the amount of time since 2013, since I started trading crypto, how much actual time is clicking buttons or doing something, man, I would say altogether like a few days at the most. Like yesterday, for example, like to get into my initial Tezos entries, it was maybe an hour or two at the most of like actually watching level 2 and like getting into the trade. And 99% of the time is no action or researching or doing something. Very, very small percentage of the time is actually entering orders or managing a position.
Absolutely.
Yeah. So with that, I'm out.
Yeah, folks, we've gone on 2 hours, so we'll stop ranting, crypto ranting. We'll end it there. Hope everyone has a great weekend, and let's see what kind of fun and games next week brings for us, folks. So take care. Cheers.
Take care, guys.